Right, everyone, here we are with ticker symbol FSR, Fisker Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, Fisker Inc. has had a run since the beginning of November, basically. I mean, the ending of October, it started to slightly run up, then it ran up, and since the beginning of November, it ran up to these highs of about $12. It dipped again to 10, and from that point forward, it's just been running all week. So let's go ahead and see here what has been going on and what is important for Monday. And then we're going to look at it a little bit broader so that we can go ahead and get these numbers to the T and what we want to pay close attention to as this continues to play out. So currently we have our resistance and support, and they are up here not too far away from the current price. I mean, this is a pretty narrow stretch here, but let's look at our 50-day moving average. Our 50-day moving average is 1557. As long as we're above it, we're in bullish territory. The moment we're below it, we're in bearish territory. So very important to keep that in mind. But the lowest point reached after this bullish run continued in the day was right here at 1588. I'd write that down just to keep it in mind if this support does get broken through and actually gets closer to the 50-day moving average. 1588 is your next point of reference. And the highest point reached in this run, which is probably the most important resistance level for the bulls, is up here at 1812. So writing down those two numbers, you'll know the furthest down it could go before it hits the 50-day moving average, and you're going to know the highest point. That means that it's going to hit newer highs and new resistance levels if it gets broken through. But before getting to any of those numbers, let's narrow in here and see what's important for Monday. So the first thing is our resistance level. Our resistance level is 1788. If that gets broken through, then the bulls are on their way up to newer highs, new resistance levels, and reaching newer depths into bullish territory, pulling away from the 50-day moving average, moving upward. And the one thing I want to emphasize is for the bulls to maintain control and this momentum that they have here, they need to break through that resistance. They need to. If they don't accomplish that, they're actually going to have a point where the 50-day moving average is catching up to the price. And if they miss it and they're kind of just hanging out sideways, at one point, this is actually going to cross it. Now the 50-day moving average is above, and now we're below, which means that now we're in bearish territory. And excuse my terrible drawing, but I did want you guys to visualize that is a possibility if this does not break through resistance. So that's why super important for the bulls to break through 1788, turn that into a support, and reach newer highs. Now, on the other hand, we have what the bears want, and the bears want to break through support. This is the first support level to break through before getting to the next one, which is down here at 1588, before it even gets to the 50-day moving average. And the 50-day moving average is 1557. You want to have that in mind. So currently, the support level here is 1669. If that gets broken through, you have a window to see how this is reacting between 1669 and down here at 1588. And then if you want to break it down even further from 1588 down to 1557 before it goes into bearish territory. Now, if it does go into bearish territory, let's just say that the volatility is that significant, you're going to want to pay close attention to how the stock is reacting, but it could actually be on its way back up because the tug of war could start. But the later that it takes for the bulls to appear, the harder it's going to be for them to gain control again. So if they appear before it breaks this first support level, they could be on their way back up to continue the momentum and break through this resistance of 1788. Now, if it takes them till down here at 1588, you see it gets more difficult. They could reappear. We're still in bullish territory, but they need to continue to break resistance levels to continue the momentum. So my emphasis to all investors is pay close attention to the behavior from the first support level here at 1669 and watch how the stock is reacting. And then from there, you can break it down between 1588, 1557, and see how it's reacting within that area and see if the bulls are trying to reappear or if the bears are actually tearing this one down fairly quickly. Once again, I want to emphasize that all investors pay close attention here because the bulls need to break through 1788, turn it into a support, and pull away from it to reach newer highs. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart, and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.